Let's talk to Federico Bentley. He is a sales trader at Ayondo. Very good morning to you,
Good morning.
Freddie. Right, we've got 9 thought-provoking slides as always. Let's get on the old skateboard and get through them. Right, let's kick off with the first one, NeoWaves. I assume this is the name of a trader under the system.
So this is a German fellow who's fairly new. I guess I normally try and show people who have an institutional level, which means that they've been with us for a minimum of 1 year. He's trading mostly S&P and the DAX. He's got a level 3 for risk score, which is fairly low drawdown. And he's last year returned about 10%, which is nothing too exciting. Looking at something like the Nasdaq, which returned 36%. It's quite in line with lower risk management, I guess. You can always increase the risk factor with this guy, but he's doing fairly well this year. You look at the overall market, it's probably down 2 to 5%. Especially this morning, a bit of a fall after Trump's comments, but he's up about 5%. So it's sort of doing a little bit better than the overall benchmark, I guess you could say.
Okay, so I can basically replicate his trading.
Exactly. So if you followed him last year, you'd be up 10%. If you followed him this year, 1-to-1, you'll be up 5%.
Understood.
So it's about 1% a month, which is nothing too exciting, but it's been a fairly turbulent and volatile year.
Yeah.
So he's out riding that storm.
Okay, well let's move on to in terms of his performance in 2018. What is this telling the crowd?
Well, you can see on the top left is that asset allocation, so you can see what he's trading. Before we've had a lot of traders who solely just look at the DAX. He does, trade mostly the DAX, but he does look at something a little bit different with the S&P. He looks at some FX. He looks at a bit of a euro dollar, some other, dollar yen. So I guess it's slightly more diverse, I guess you could say. So it's not so one-dimensional. He's trading about 10 times a month. His risk per trade usually is less than 0.5%. So 10 trades a month is fairly low risk, I guess you could say.
Understood. Okay, well let's go on to the third slide with this guy, and this basically is a breakdown of all the trades. Do you see these in real time?
You do. So these are the transaction history. So these are the recent trades. You can see on the top it says open positions, which means he doesn't actually have any open positions because he's more of a day trader right now. He doesn't hold positions overnight, which kind of mitigates that overnight risk, I guess. We have a lot of guys who tend to hold positions for a bit longer. This guy's in and out, which a lot of people prefer maybe because you could say less risk.
You can sleep well at night, right?
Exactly. You'd just rather him get out of the way. You can see there's lots of take profits, which at least it looks like it's hitting his targets, I guess his strategy. Risk per trade on the right, you can see it's fairly low. All is from here, all is less than 1%. And his units, which is the stake size, so the volume that he's trading, it's usually in line. it might be sort of €5 point, €3 point on the DAX. S&P a little bit larger, but it's usually in line. So that's why his risk score, it's fairly emblematic to that. It's fairly low, doesn't hold too many open positions. And he's been trading with us for about a year and a half. So still fairly new, but he's sort of doing his thing right now and outperforming a lot of the other traders right now.
Understood. Okay, well let's move on to the next headline: investing with Ayondo. Do you want to run through?
Yeah, I mean, it's a bit different this, I guess, with a lot of clients may come to Ayondo thinking that we only offer social trading or your own trading. What we also do, we're very similar to just a usual stockbroker, I guess. You can just hold trades 1-to-1. If you want to buy 100 shares of Apple, you can do that with us. Completely using no leverage, I guess.
Right.
On each deal ticket, you do have the variable margin, so you always have the choice of how much margin you trade with, whether you want to use 5% and borrow some money, or you use the full 100%. The benefit of doing it through Ayondo instead of doing it with something like, say, with your bank or Hargreaves Lansdown, is that because it falls technically under a spread bet, you pay no capital gains. So if you're making 50,000 a year with your bank or 100,000 a year, whatever it is, you've got to pay usually 10 to 20% of capital gains above that allowance.
Okay.
You're still receiving 100% of UK dividends, 85% on US dividends. And even if you want to use it as an alternative to an ISA, a yearly cap on an ISA is £20,000. With Ayondo, you can do as much as you want, really. You can take it out without any penalties. And recently what we have been seeing is a lot of Irish clients who, we have a fairly large Irish client base. They're starting to use us a lot more because their capital gains are 33%. Instead of the highest tax of 20% here, it's a lot higher. So a lot of them will start using us simply as a hedge or just as a sort of an alternative portfolio.
Okay, so no monthly fees or financing costs?
Not at all. I mean, I sort of hold a few shares with my bank and HSBC, and every month I get sort of £10 to £20 of fees, which I'm not trading anymore. It's just for holding them. So I guess it does add up.
Okay, so let's now move on to non-margin trading.
So this is just a pure example. If you were trading it on leverage, on the left, it's something like Barclays. Here's £10 a point, equivalent of 1,000 shares. Usually it's a 5% margin, and you can see here that the margin requirement and the trade value are obviously different because you're only putting down 5%. On the right, you can see how you simply just scroll that margin at the bottom to 100%. Therefore, you are just holding it like a normal cash equity, same as you do with the bank, 1-to-1, 1,000 shares, and there's no financing. So the only cost really is the initial spread. So you can hold that for a year and have no cost and still receive those dividends, quarterly or whenever they hand them out.
Okay, let's talk about ESMA and their changes.
Yes, I guess something that everyone's talking about. Obviously, ESMA have there will be increasing margins. They haven't technically given a date yet. As soon as it's released on their public journal, which is their website, it'll be 2 months after that. So right now, it's sort of end of May. We could say earliest, maybe August. It could be later. We don't know yet. But what they're sort of insinuating, what they want to do is for indices, such as the DAX or the Dow, which currently you can trade at the 1% margin, they'll be increasing to 3.33%. Okay. So let's say if you're trading the Dow Jones at £10 a point, if the price is 25,000, that's going to cost you a margin of 2,500. Once ESMA integrate these changes, it's going to cost you just about £8,325. So the change is fairly drastic, you could say. But for people who try to utilise all of their margin, you're going to need a little bit more cash, or a lot more cash in this case, to hold these positions.
Okay, so let's go on to part 2 of the ESMA changes.
Part 2 is just an overall view. So for most currency pairs, FX, usually you might be trading with less than 1%. This will be increasing to 3.33%. For gold, for example, currently has a 2% margin. This will be increased to about 5%, so about 2.5 larger. And for equities, right now, if you're trading Barclays, as we saw there, 5% margin, this is going to be increased 4 times to about 20%. So you can see that the changes will affect your trading if you're obviously trading with leverage. If you're not trading with any leverage, obviously right now you won't have any effects, but you can see how it can sort of cause an effect on your account.
But is this protecting the spread betting firms, or is this protecting...
It's meant to be, well, it's more for the clients, I believe. But what they're also including is a margin closeout of 50%. So your margin available always has to be 50%. A lot of people, like to use, if you have £10,000 in there, you'd like to use the full amount to benefit on that leverage. So by having 50% available, margin available, there will be lots of, I believe, lots more sort of margin calls. And at the end of the day, it's protecting the clients. But if you have to put down a lot more margin, you technically have to put down more money. So in that case, with the £10 point in Dow Jones, from £2,500 to £8,000, you have to put more money down, which means if you're putting, instead of 10 grand down, you're putting 30 grand down, you may be risking more funds. Right. So, we'll have to wait and see how the changes do affect the market. It will be for about 3 months, and then after that, they decide if it's indefinitely or they'll go back to the old.
Sort of a period of review.
Yeah, exactly. It's more of a reflecting, I guess, period to see how it does affect the overall market.
So this is for all the retail people. Let's move on to the next slide, because this is basically the professional clients. Is it exactly the same?
It's different. So for the ESMA changes, this will only be affecting retail clients. If you already are a professional client, it won't affect you. And for clients who are thinking, how can I move to professional client if I want to? You obviously have to, you have to be able to be categorised as a professional client.
Okay, so just so I understand, if you're categorised as a professional client, the new rates do not apply.
Do not affect
It'll still be 1% margin on my Wall Street position.
Exactly. Okay? So professional client, the first ones you have to trade at least 10 times quarterly in the last year. The second one is...
So if you've got to tick all these boxes or any of them?
2 out of the 3.
2 out of
the 3. The second one's your investment portfolio has to be over €500,000, €500,000, which doesn't count property. This would only be sort of whether it's a pension and you're investing within your pension, a bank account, or simply a trading account with over €500,000. And the third one is if you've worked at least a year in the sector, in the financial industry. So at least if you do categorise yourself 2 out of the 3 of these, then you will be able to move to a professional client, obviously at your own request.
But I would have thought point number 1, you must have carried out transactions in
most
significant size. What's significant size? A pound on Wall Street.
It depends on the product. Right? So it's fairly vague at the end of the day. They have made it quite vague, but I'd say most of our clients, most of them have used, they have ticked off that first list. And if you haven't done it with your broker, you can show proof of your previous broker if you're trading with another broker and you've done the equivalent sizes and the equivalent amount. So I think most people do tick off the first box. It's just the second and third are slightly harder. So the investment portfolio, a lot of people are asking if property counts, but sadly, property does not count.
Wow. Okay, well, let's wrap up with zero balance protection. What's this all about?
Yeah, obviously we've had this since 2015. A lot of brokers are slowly implementing this because of the changes of ESMA, which means purely you can't get into negative balance.
Well, you can go into negative, but you cover it.
We cover it, exactly. So Ayondo actually takes the risk. But what a lot of brokers have been doing recently is implementing this because of obviously ESMA. But what they don't tell you is that right now for retail clients, you might be covered, but if you're a professional client, you actually lose that zero balance protection. Not all brokers offer this, but there's a few out there that aren't actually offering it to the professional side.
So I understand, I'm a professional client. Okay, so I can do my £10 a point on Wall Street, and I only have to put up $2,500. But in some brokers, I would lose the zero.
Exactly. So if there is a big fall, there's a black swan event, you actually might go down, let's say negative 10,000. They will chase you up. The few brokers are doing this for the professional side. With us, we don't. Sadly, obviously, we don't discriminate with other retail professionals. So we've had it for at least the last 3 years. So we're sort of already ahead of the game, I guess you could say.
Okay, we run out of time. Freddie, as always, lovely to see you.
Thank you very much.
We'll see you very soon.